What is going on YouTube? Hidden back making another brand new Crypto TV episode. In today's video, we're going to be spending the day talking about Polygon, also known as Matic. As you guys know, recently we've been branching out on the channel, trying to cover other cryptocurrencies that might be potential investment opportunities moving forward. Just branching our wings a little bit, trying to find maybe some other alternatives to some good utility within this crazy meme market that we have today. So specifically, we're going to be looking at Polygon, kind of basing maybe how the end of the year might play out, and then what we could expect with the price prediction moving forward into 2022. Polygon Matic is currently up today, specifically, much more so than the other cryptocurrencies right now, trading at number 15, and we're not doing too bad. There's actually some real use case behind Polygon that I would like to share with you guys, as I do find it quite interesting. And when you look at its trading view charts here, it's honestly doing very well moving forward right now. And honestly, the patterns and technicals that are actually starting to reveal itself here on the trading view chart right now is actually not bad, and does have some pretty high projection moving forward that may actually set us back up to all-time highs into 2022. So I'm very excited to talk about that. But with that being said, I would like to give a shout out to ALGEBRA.FINANCE for bringing us today's video. As you guys can see, they are creating the best AMM solutions for Polygon, coincidentally, and Binance Smart Chain, BSC, as you guys know of. As you guys can see here, Algebra's goal is to create similar AMMs for other leading blockchains, not to copy, but to reinvent and improve. And as you guys can see, it has released today and will release today by the time this is uploaded. So I'm very excited to go over this at the end of today's video. They do have Algebra token, and you guys can learn a lot more about what exactly Algebra is and how it's actually using the Polygon blockchain. So guys, with that being said, we will be going over them more at the end of today's video, so definitely stay tuned if you're interested in that. Otherwise, I have linked them down in the description if you'd like to check them out earlier. And with that being said, definitely make sure to smash the like button, turn on post notifications, and let's jump into today's episode. So as you guys can see here, Polygon, formerly known as Matic Network, is an interoperability and scaling framework for building Ethereum-compatible blockchains. Quite interesting. It is still centered around the Matic token, which is used for governance, staking, and gas fees. Very familiar if you guys have watched many cryptocurrency projects that come to market, have a specific cryptocurrency that they use on their own platform that has governance and staking and gas fees and discounts and things like that. But in February of 2021, Ethereum Layer 2 scaling solution Matic Network rebranded as Polygon, an interoperable blockchain scaling framework. Now here we'll explore what Polygon has set out to achieve. So basically, previously known as Matic Network, Polygon is a framework for building interconnected blockchain networks. Very interesting. It seeks to address some of Ethereum's major limitations, including its throughput, poor user experience, and lack of community governance, using a novel sidechain solutions. So basically, Polygon created their own project based off of the Ethereum blockchain that improves and increases the interoperability of Ethereum networks. So companies, instead of actually building and opening up their own projects using ERC20 on the Ethereum blockchain, they'll actually use it on the Polygon network, which will give them more enhanced abilities and increases, as you can see here, higher speeds and delayed transactions. Polygon is set to actually fix that for the projects that actually build off of Polygon network, which is really cool. Rather than being a simple scaling solution like its predecessor Matic, which uses a technology known as Plasma to process transactions off-chain before finalizing them on the Ethereum main network, you can see Polygon is designed to be an entire platform designed for launching, which is what we just said, interoperable blockchains. Through Polygon, developers can launch preset blockchain networks with attributes tailored to their needs, and these can be further customized with a growing range of modules, which allows developers to create sovereign blockchains with more specific functionality. So that's basically the point of Polygon, is to make it better than building off ERC20, which is really cool. So now, with that being said, I would like to talk more about what exactly I'm seeing here on the Matic network. So honestly, we've had a very good charts compared to other cryptocurrencies like Ethereum, XRP, Bitcoin, which have seen definitely much different charts here. I want to pull up, you can see here, Bitcoin on its weekly, kind of the scaling that we've seen here, which is literally a straight streamline to the upside here. It's very, very, very peaked at like a 50 or 60 degree angle here. Even with Ethereum has pretty much just been a streamline upshot to the upside here, straight to the upside here. You can see Matic, on the other hand, is a little more of a consolidation, slower paced, maybe a 30-degree angle as we consolidate and slowly move to the upside here, which is a good sign. Now, short term, we'll see how things play out. Obviously, we're still dealing with, specifically today, the outcome of the Federal Reserve actually deciding what exactly we're going to be doing with inflation, whether we're going to be increasing rates, which would obviously or should help. And I do have reasons as to why that would help. You can see here, when the Federal Reserve seeks to control inflation by influencing interest rates, when inflation is too high, the Federal Reserve typically raises interest rates to slow the economy and bring inflation down. And when inflation is too low, the Federal Reserve typically lowers interest rates to stimulate the economy. So when they raise interest rates, people don't want to borrow money. They typically tend to save their money, which, more banks start to raise higher interest for saving your money. So they'll say, hey guys, use our bank and we'll give you maybe 1% interest more than what they normally give. And that increases the reason to save money instead of borrowing to spend. So that's the point there. But maybe when we have this outcome, it should decide what exactly is going to happen with XRP. Will we see the pop on XRP or on Ethereum or on Bitcoin too? Because these are all forming falling wedge patterns, as you can clearly see drawn out on the daily here. They do have falling wedge patterns. Ethereum also has falling wedge patterns, and we're looking for that third breach or break to the upside here. And we'll see if the inflation rate and the Federal Reserve will have any influence on cryptocurrency, which will be interesting. But back to Matic, what's really catching my eye here is you guys can see that we are in an ascending fractal. There's clear price floors and price ceilings set up where there's a top resistance here, where on numerous attempts we have 1, 2, 3, we have like 4, if not 5 here, 5 confirmations of top resistance. This is a solid resistance level in regards to uptrend. We need 3 confirmations for us to be secure, and you can see on the bottom support we are here, and you can see on the bottom support here we have 1, 2, 3, 4, and we have like 5 here. We're looking for maybe a 6 one, 6 retest on this bottom support here. Everything is showing signs of potential swings to the upside here. So long term, with the scaling that we're seeing here, just by consolidating inside of this as we scale up, we could easily see us retest into January. We could easily see prices back up to $2.67. In regards to 2022, we could see prices even higher, up to $2.96, retesting all-time highs back into March of 2022. And this pattern will scale itself and continue to raise up as we are starting to fill this ascending fractal here, which is exciting. This shows a very long-term projection in regards to how we could be moving forward within Matic as we reach 2022. And scaling this up, to draw a continuation pattern. Let's say we continue to, pinball off these and head higher. You can see we could easily hit prices as high as $3.50 as early as May. We could see mid-May here, if not quicker, if we decide to breach even faster. But you can see in regards to the percentage swing, we're looking for a pretty big run. This is about 100%. We could 1x our money very quickly, just in a matter of months as we start to approach 2022. So things are playing out very well for Matic. Short term, looking at things right now, you can see for the most part, we've been in a small consolidation pattern here. It seems to be fairly indifferent from the way other cryptocurrencies have been moving here. Instead of correcting downwards like we've been seeing pretty much within all the other cryptos, as you can see, Bitcoin's correcting lower, Ethereum's been correcting lower since November 9th, XRP has been correcting lower since November 9th here. You can see since November on Matic, right here, November 9th is right about this level here. You can see we literally bounced off bottom support and have reversed all the way up to the upside, which shows we're not actually following the same pattern that influences the other major cryptocurrencies, which is good news. So what we're looking for right now is maybe as we're starting to correct lower, you'll notice how the patterns kind of develop. After retesting top resistance, we usually scale to bottom support, then we swing back up to retest top resistance. Vice versa, this pattern continues, and it's continuous until it retests support here. You can see it looks like we just saw a rise back to top resistance here, retesting the top back on December 8th, which was only about a week ago. And since then, we've been correcting lower. So honestly, what I'm expecting to see happen now is a continuation back down to bottom support here. Maybe this plays out till the 21st or a little bit longer here. What we're looking for is another retest of its moving average here. This would be a prime opportunity short term to buy in and leverage this cryptocurrency. So honestly, what I'm waiting for is a retest back here at its moving averages on the daily, which seems to be very in line with the uptrend here. So we're looking for a small short-term correction, maybe by the end of December, if not next week, at a target of about $1.60 to maybe $1.70. Once retesting bottom support, it would show prime factors to buy in anticipating a way to leverage this back up to maybe $2. I'm looking at a price target next into January of $2.74. So I do think we're in a very long-term good scale, and Polygon does look pretty impressive in regards to where it will be moving to in the near future here. A continuation to the upside here. So short-term, we look good. Price prediction for the future looks great too. We're looking for a very small correction, bounce off bottom support. That's when I plan on buying in here, and then a leverage back to the upside. So excited, things look good for Polygon, and it actually has some utility which will increase its value as we move up forward. Otherwise, guys, I do want to talk more about ALGEBRA.FINANCE with you. I want to give a huge shout out to ALGEBRA.FINANCE for sponsoring today's episode. As with all crypto projects, please do your own research and never invest anything you can't afford to lose. So guys, ALGEBRA is a new decentralized exchange on Polygon with adaptive fees, built-in farming, and more with support for deflationary tokens that will be released on December 15th. So guys, let's take a quick look at what we can actually do with it. Now, there are three main ways you can use ALGEBRA. Similar to DEXs, you can swap tokens here by connecting MetaMask. And you can see the fee and the conversion rate, and also install your slippage settings. Now on the pool tab, you can provide liquidity and check out this feature. If you've ever traded on Uniswap v3, you've probably already seen it. But on ALGEBRA, you can operate concentrated liquidity and set up the range for your position, move the slider, and choose where you are willing to allocate your liquidity to be traded. Now, what does range really mean? Well, concentrated liquidity gives you a chance to earn more even to LPs with small funds. And it becomes possible due to providing liquidity in a smaller price range. And in this way, if you choose a small range, you'll make maximum fees without your liquidity compared to those who actually choose a wider range. Now, ALGEBRA gives you a chance to earn more on smart liquidity providing, and the other benefit is that ALGEBRA works on the Polygon blockchain, which is known for its tiny network fee compared to the Ethereum network. And that's why ALGEBRA supports minor investors who don't have millions of dollars to trade, and their trading fees for pools are adjusted automatically based on trading volume, pool volume, and volatility, which ALGEBRA is able to support using the concentrated liquidity technology they have. But that's not all. ALGEBRA offers farming events, and you can take your position, put it into a farming event, and earn extra rewards provided by ALGEBRA or any other listed Polygon project. And here you can see an event which is already active, as well as what positions are eligible to join, and the reward amounts that seem quite significant and can even reach up to 500% APR. Now guys, much bigger max rewards are due to the range and concentrated liquidity technology that we discussed earlier. So who exactly is the team behind ALGEBRA? Well, unlike other DEXs, ALGEBRA team is open, so you can find them on the landing page, and they are experienced traders that have already left a mark in the crypto history with such projects such as Rubik, Cross-Chain Swap Protocol, and MyWish, which is a leading smart contract generator platform. Now, besides, ALGEBRA was supported by quite a bunch of VCs, including NGC, Dutch crypto investors, LD, and others, and they also enjoyed the support of Polygon and even received a grant from them as well. Now, its native token ALGB is listed on CMC and CoinGecko, and back on the website you can see the tokenomics described. Now, ALGEBRA also includes the best practices that were implemented in Uniswap v3 to cover the vulnerabilities and then focus their team efforts to solving the liquidity issues. And instead of several pools with different fees like it was on Uni, ALGEBRA introduces a unique dynamic fees formula that allows you to earn more on liquidity providing, which sets optimal fees based on volatility, trading volume, and pools volume. Now, it eliminates all the hassle from the user side and promises to be way more profitable. An LP does not necessarily need to choose pools and move liquidity between them for getting the highest fees. Now, traders also win since all liquidity is concentrated in one pool, which guarantees the lowest slippage. And ALGEBRA also introduces built-in farming for LP, which projects will be able to push extra project tokens to pools that will be eligible for incentivizing and set farming conditions. And also, extra tokens must be distributed not to every provider, but proportionally to those in the liquidity trading. So guys, if you would like to check out this project, then definitely make sure to check out the links in the description where you can find all their information. Otherwise, huge shout out to ALGEBRA for sponsoring today's episode. As always, make sure to subscribe, turn on post notifications, smash the like button for the YouTube algorithm, and I'll see you in tomorrow's video. Peace.